Hi everybody, thank you very much for joining us for today's presentation on the pension lifetime allowance and how it works. I'd like to give you a few seconds just to read the disclaimer before the main session starts. I hope you enjoy this session and find it useful. Thank you. Hi everybody, my name is Abraham Ace. I'm a Chartered Financial Planner with Atticus Financial Planning. Thanks very much for joining us for today's session on the pension lifetime allowance. I've received quite a few questions about this recently, so I thought it'd be a useful area to do a video about, where we just break it down into bite-sized chunks. It's fairly complicated, but I think by breaking it down we can just provide a bit of clarity. Alright, so what we'll look at today then is we'll look at the lifetime allowance, what it is, how much it is, what triggers a test against the lifetime allowance. We'll also look at how your benefits are valued. We'll look at how the lifetime allowance charge is calculated. And then lastly, what we'll do is we'll look at some of the remedies that may be available. Alright, so if we start right at the beginning with the lifetime allowance, it was introduced in April 2006 as part of the so-called pension simplification legislation. It's a terrible name, but you know, that's what it is. So the lifetime allowance is basically the maximum amount of pension benefits an individual can build up in all their pensions over their lifetime. And that includes defined contribution pensions as well as defined benefit or final salary pensions. All right. The lifetime allowance is currently £1,073,100, and as a result of the impact of COVID, the Chancellor has frozen the lifetime allowance at that level until the 5th of April 2026. Okay, so what actually triggers a test against the lifetime allowance? So most people, or a lot of people, think that actually as soon as your benefits exceed the lifetime allowance, that triggers a test against the lifetime allowance. And that's actually not the case. In order for there to be a test against the lifetime allowance, there has to be a specific event that occurs, which we call a benefit crystallization event. And there are a number of those. And so I've highlighted here the three most likely that you'll come across. There are others, but actually, to be honest, some of them are you're unlikely to ever come across, and the others are just very, very complicated. So the main benefit crystallization event is obviously when you take your benefits. At that point, that'll trigger a test against the lifetime allowance on the portion of your pension that you're taking. Then also death is a benefit crystallization event. So if you pass away, then all your pension benefits will be added together and tested against the lifetime allowance. And then lastly, if you reach age 75, that's a benefit crystallization event, and all your pension benefits will be crystallized at that point and tested against the lifetime allowance. All right. Okay, so then how are your benefits valued when they're tested against the lifetime allowance? So firstly, it's pretty easy with a defined contribution pension. What you've done there is you've accumulated a pot of money within the pension, and it is actually the value of that pot which is tested against the lifetime allowance if you were to crystallize all your pension at once. But also, what you have the option to do is you also have the option to only crystallize a portion of your pension. So, if you, for example, have a £2 million defined contribution pension, but actually all you want to do is take £25,000 tax-free cash, that means that all you have to do is crystallize £100,000 of your £2 million pension. So you don't have to crystallize all your pension in one go. So let's carry on with that £2 million example. So you can actually get a situation where within the same pension you have a crystallized pot of benefits and an uncrystallized pot of benefits. So in this situation where you crystallize £100,000 to generate £25,000 of tax-free cash, what you'll end up with is an uncrystallized pot of £1,900,000 and then a crystallised pot of £75,000. because you've crystallised that £100,000 and you've taken £25,000 out of the pension as a tax-free lump sum. It's not the most simple concept to get your head around, but if you have any questions, just give us a call. We're always happy to help out with this. Then with defined benefit pensions, it's slightly different because you haven't accumulated a pot of benefits. What you've built up is an income that you're entitled to in retirement. So the way that is valued is the income at retirement is multiplied by 20, and that amount is tested against the lifetime allowance. So if you've built up an income of £20,000 and you take that benefit, the 20,000 will be multiplied by 20, which will give you an amount of £400,000, which will be tested against the lifetime allowance. Now, it'll be below the lifetime allowance and there won't be any problem. Also, some defined benefit pensions will allow you the option to take a tax-free lump sum in return for a reduced income. In that situation, you multiply the reduced income by 20 and add the tax-free lump sum to the product of that calculation to give you the amount that will be tested against the lifetime allowance. All right, once again, that's a simplification of the whole process, but actually you can use that as a way just to determine more or less where you are in relation to the lifetime allowance. Excellent. So, when you exceed the lifetime allowance, how do they calculate the lifetime allowance charge that you're going to pay? So everybody knows about the 55% charge because the media went to town on it. And the funny thing about this is that that is probably the charge that is least likely to happen. So if you retire, that 55% charge is only taken if you take the excess over the lifetime allowance out of the pension. So you've got a pension which is £100,000 over the lifetime allowance, and you draw out that £100,000 excess. You take it out of the pension. Okay, at that point, you're going to pay a 55% lifetime allowance charge, so you'll receive a net 45%, so £45,000 of that £100,000. Now, in reality, the pension, the money, the excess within the pension is exempt for inheritance tax purposes. So there's not a lot of times where there's going to be a really good reason to take that excess out of the pension, pay a 55% charge on it when you take it out, and then also when you die, pay a further 40% inheritance tax on it. It just doesn't make sense. And it also continues to grow in a tax-free environment. So in reality, in most cases, you're probably just going to leave that money in the pension. Right, now, let's say you've got that £100,000 excess over the lifetime allowance, and you decide, okay, you turn 75 and you decide you're not going to take that excess as a lump sum, you're going to leave it in the pension as a pension. So it's just going to stay in that pension. In that situation, you're going to pay 25% on the excess over the lifetime allowance. So on £100,000, £25,000 will be paid out to HMRC. The 75,000 will remain in the pension, and if you draw an income from that in the future, then you'll pay income tax on it. All right, so I know which option I'd probably go for if I had the choice. So I'd probably shoot for that 25% option most of the time. Okay, so there are some remedies that are available. They're not fantastic. Okay, so you can still apply for Fixed Protection 2016, which will fix your lifetime allowance at 1.25 million. But you can only use that if you haven't made any contributions to pensions since the 5th of April 2016. Similarly, you can still apply for Individual Protection 2016, which basically will fix your lifetime allowance at the value of your pension at the 5th of April 2016. Now, you can only use that option if your pension was in excess of £1 million at that point in time. There are a load of other protections that have been made available through the years which aren't available now. So in 2009 you had the option to actually to apply for enhanced protection or primary protection. In 2012 you could apply for fixed protection, and in 2014 there was fixed protection and individual protection at reasonably high levels, but those are no longer available. The key thing I'd say with those is if you did apply for them, take some advice before you do anything with your pension, just to make sure you don't invalidate them. Okay, excellent. All right, then there's also lastly, it's a very small benefit, okay, well, it's not lastly actually, but you have the small pots option. You can take up to 3 pensions below, you can crystallise up to 3 pensions which are below £10,000 each, and they won't be tested against the lifetime allowance, certain requirements, but actually it's a small benefit, but actually every little helps, especially when you consider that during our lifetimes these days we tend to build up numbers of different pension pots. Then lastly, the main thing that we tend to do is we can actually defer exceeding the lifetime allowance, so defer that lifetime allowance charge. And how we do that is we help our clients to crystallise up to the lifetime allowance and not exceed it. Now, that means that you put off paying that lifetime allowance charge until either you reach age 75 or you die, whichever comes first. Those are both benefit crystallization events, and at that point you'll pay a lifetime allowance charge on the excess. Okay, but what we're doing for there is we're playing for time, because anything could happen. The lifetime allowance could be increased, it could be abolished. There's all sorts of things that could happen, not guaranteed, but it provides you with a bit of hope that your circumstances may be better in the future. All right, so I hope I've tried to break that down and make that as clear as possible. And I hope you found that useful. If you have any questions, please feel free to just give us a call. There'll be a slide in a couple of seconds' time with all our contact details. Our first consultation is always free. So once again, if you've got any queries or questions or concerns, just give us a call, and we're happy to help. All right, I hope you have a fabulous day and all the best. Thanks once again for joining us for today's session. I hope you found it useful. If you'd like any further information, all our contact details are below. Feel free to get in touch with us anytime. Have a great day.